Hi, I'm Sydney with California Pools and Landscape, and today we're interviewing our senior manager, Nicole, and she's going to tell us everything you've ever wanted to know regarding pool financing. We are going to answer all your finance questions in these 6 segments. So Nicole, you and your team walk our customers through the entire finance process. What do they need to know? What's required to get qualified?
That's a great question. So lenders require a credit score of 700 or greater to qualify. They also want to see no derogatories on your credit report, such as missed or late payments or any charge-offs from past closed accounts. And all foreclosures or bankruptcies are going to have to be discharged for a period of 2 years. Another thing that lenders are going to want to see is proof of income. So typically, you just submit your pay stub for the last 60 days. For those who are self-employed or have income such as bonuses or commissions, they're going to want to see tax records for that. They want to see a history of that type of income in order to prove that you consistently make that type of income. Another thing that they look at is residency. So they want to make sure you're living in the home that you're putting in the pool or where you're doing the home improvement. So again, driver's license will suffice. If your driver's license does not happen to have the address where you're living or where you're putting in the pool, simply the front page of your insurance homeowner policy will typically have that information, and we can submit that to the lender instead.
Very good.
Yeah. And then the last thing the lenders are going to want to look at is debt to income ratio. So they're going to want to know the debt to income ratio is between 35 and 45%, including the pool payment.
Wonderful. And what is debt to income?
Debt to income is simply your monthly bills divided by your monthly income. So take your minimum payments that you make to your car loan, your mortgage company, your credit card, and then figure in the pool payment, and you just divide that by your monthly gross income. Now, we do that all for you when you apply, but if you want to do that yourself, so that's sort of a handy rule of thumb.
So it sounds like your team really makes this process easy for our customers. What are the different type of loan programs available, and what's the max amount that they could borrow?
So there's 2 main types of loans. First are secured loans and then unsecured loans. So let me address secured loans first. So they're one of our more popular loan programs. So secured loans are also called second mortgage loans, as they will be a second lien holder on the house. It has nothing to do with your first mortgage, simply that the asset, which is the house, acts as a security for this loan. So with that type of loan, it's going to go up to a 15-year term, making payments really affordable. And the maximum loan amount will be up to $250,000. You probably don't need that much, but the loans for those who are very well qualified can go up that high. The good thing about these specific pool loans that are secured is you don't need a lot of equity to qualify, because my pool lenders count the pool as an asset to the property before it's built. So this is a great option for someone who maybe just moved into a home or has only been into the home for a couple of years.
So a secured loan sounds like a great option, but what if you don't want to tie in the pool with your home?
Well, then you want to go with an unsecured loan option. So unsecured loan is simply a personal loan for a home improvement, being the pool or backyard landscape. So with an unsecured loan, the lender is going to look at your credit history and your ability to pay back debt as determining factor for the loan approval. So with unsecured loans, they also go up to a 15-year term, but you also have a choice between 5, 10, and 12 years. The maximum loan amount will be between $50,000 and $95,000.
Great.
The great thing about unsecured loans is they're much faster to fund. So that'd be a great option for someone who wants to get started right away.
Well, what if I'm building a new home and I haven't closed on it yet?
Well, you may have the option to put the pool into the first mortgage,
Whoa.
which makes it really affordable, because then you're financing pool using a 30-year term mortgage rather than a 15-year term loan after close. So I suggest that you contact your home builder representative or your mortgage broker to see what their requirements are to include a pool into your first mortgage. Now, the wonderful thing about California Pools and Landscape is some lenders are going to require a holdback in order to put the pool into the mortgage. A holdback is simply a sort of earnest deposit telling the lender that the pool will be completed in a timely manner after you close on the home. So what California Pools will do on your behalf is we will post a pool holdback up to 15% to your lender. So when you close on the home and the pool is done, we would get that money back that we put up for you on your behalf, as well as the funds for the pool itself. So for an example, if your project is $60,000 and included in your mortgage, we would post a holdback of $30,000, and when the pool is done, we would get $90,000 back. Now we charge no fees for this. Some pool builders are not financially able to give this service. However, California Pools is in great financial standing, and we're able to do this for our customers for no hefty fees. It's simply a service that we do in order to earn your business.
Well, that sounds like something that a new homeowner should really take advantage of.
Yes, I highly suggest you talk to your broker about that before you close on the home. The sooner the better, because a lot of times we'll need to have a contract, our pool contract submitted to the lender, a good 60 days or so from close. So it's better to really make that phone call now rather than wait.
All right, here's the big one. Everyone wants to know, what are the interest rates for these loans?
Yes, interest rates is always a big question that we get here at California Pools. So these loans are going to have a rate that range between 5% and 9%. To be honest, the most common rate that I see is 6.25 to 6.5%. Those are most of our programs are going to really fit in that range. So for those customers who have lots of equity in the house, your rate's going to be closer to 5. For customers who have credit challenges, you're going to be closer to 9%.
Okay, and are these rates fixed?
Yes, all of our rates are fixed, and we have no prepayment penalties, which is very important.
How do those interest rates factor into my monthly payments?
A great rule of thumb is for every $10,000 you borrow is going to be $90 in monthly payments. So a $45,000 project at 15 years at 6.5% interest is going to be $392 a month. So a $100,000 project with those same terms is going to be about $897 a month.
Well, that sounds really affordable.
Yeah, it is.
Your staff really streamlines this process for our customers. How long does the loan application process take?
So secured loans are going to take 4 to 5 weeks. There are items like title reports and appraisals that have to be obtained. So naturally, those loans take longer to close. Unsecured loans are going to take on average 5 to 7 days from when you apply to when the loan funds.
Is there a way to make it go even a little bit faster?
Yes, so the quicker we can respond to the lender's requests with additional documentation, like I mentioned earlier, like proof of income and proof of residency, the quicker they can close in the loan. Also, if you decide to pay the deposit with your signed contract, we can work on the pool permits and the financing at the same time.
Wow.
Now, doing so could save up to 4 weeks, and we'd be able to dig that pool 4 weeks sooner by running both items concurrently.
Perfect. So it sounds like with a contract deposit and a finance app, you guys are rocking and rolling.
Yes, we'll get that pool dug in no time.
Well, once our customer closes on their loan, how do those funds disperse and what does that payment process look like?
For secured loans, the lender's simply going to mail you dual party checks made out to both the homeowner and California Pools. And you simply endorse those checks and give them to your construction manager, or we have a free courier pickup service. Now, we will request those checks during the major construction phases, which are typically excavation, shotcrete, decking, and interior finish.
Okay, but what if I have an unsecured loan?
So unsecured are going to be dispersed electronically upon your approval or at a predetermined date.
Very good. So you guys have it all taken care of.
When it comes to money, we sure do.
Here at California Pools and Landscape, we make no money on financing and we do not charge any additional fees for our services.
We simply want to be your pool builder of choice. We encourage you to go research, check with your own personal lending sources, come back to us, let us do a free comparison. We're passionate about finding you and your family the right finance terms to meet your budget.
Get started today. Go to calpool.com/funding. It takes about 10 minutes and then you're one step closer to swim time.